Welcome back, everyone. Today, we're diving into the exciting world of stock market investing. If you're ready to learn how to potentially grow your wealth through stocks, you're in the right place. Let's get started. Before we jump into the specifics, let's cover some stock market basics. Stocks represent shares of ownership in a company. When you invest in stocks, you become a part owner of that company. The stock market is where buyers and sellers come together to trade these shares. Now, why should you consider investing in stocks? Well, the potential for long-term growth is one of the biggest benefits. Over time, stocks have historically outperformed other investment options, such as bonds or savings accounts. So, how do you get started investing in stocks? The first step is to set your investment goals and determine your risk tolerance. Next, you'll need to open an investment account. Opening an investment account can feel intimidating, but don't worry. Many providers offer paper trading options, allowing you to practice investing with virtual money and gain experience without any risk. There are many online brokerage platforms available, such as E-Trade or Webull, that offer easy and convenient access to the stock market. Once you're set up, it's time to select stocks. Now there are different types of stocks to consider. For example, growth stocks are shares of companies that are expected to grow at an above-average rate. On the other hand, value stocks are shares of companies that are considered undervalued based on fundamental analysis. When selecting stocks, it's essential to conduct research and analysis. Look at financial statements, company performance, and industry trends. Let's say you're interested in the technology sector. You might analyze the financials of tech giants like Apple or evaluate emerging companies disrupting the market, like Square. But remember, diversification is key, as it helps spreading out your risk. Consider building a well-rounded portfolio with stocks from different sectors. For example, you might include stocks from technology, healthcare, and consumer goods industries. This way, if one sector faces challenges, your overall portfolio can still perform well. Managing risk is crucial in stock market investing. Emotions can often influence our decisions, leading to irrational choices. Stay disciplined and avoid letting fear or greed drive your investment moves. Consider strategies like dollar-cost averaging, where you invest a fixed amount regularly, or setting stop-loss orders to limit potential losses. Now, before we wrap up, let's quickly recap what we've covered today. We learned the basics of the stock market, the benefits of investing in stocks, how to start investing, stock selection strategies, the importance of diversification, and managing risk. I hope you found this video helpful as you embark on your stock market investment journey. Remember, this is just the beginning. Keep learning, stay informed, and adapt your strategies as needed. The world of stocks is full of opportunities for those who are willing to put in the effort. If you want to learn more about stock market investing, check out the resources in the video description below. And don't forget to leave a like and hit the subscribe button if you liked this video. See you next time.